everyone, we gotta go over Bitcoin. As you can see, Bitcoin is now down at 69.2K, down 10% in the last 7 days and 3.8% in the last 24 hours. We're gonna talk about this because I've been mentioning this for the longest time. But anyways, remember, I'm not a financial advisor. None of this is financial advice. Let's get straight into it. So exactly what I've been saying is going to happen is happening inside of Bitcoin right now. Bitcoin's at 69.1K now, so it's about to break down to 68K. And remember what I said before. If we close this daily candlestick here, we're in the go for a huge sell-off, right? And if this one closes as well below this bear flag, then we're definitely in the go for a huge sell-off. So this is huge. And then if we also get below this 68K support at the Fibonacci support, then that is another huge signal for a massive sell-off that's going to come. So we're going to end up seeing this pushing down to 50K. And what I think everyone needs to pay attention to is what it's going to do on the way there, right? So there's another possibility of possibly like a double bottom, right? And this is what some people have been saying, a bullish double bottom, right? And that is where we just pull down here to 60K and then we just shoot right back up and then we're bullish and then we enter the bull market. That's what some people have been saying, like a bullish double bottom scenario. I don't think it's going to happen like this. I actually think we're going to continue to go down even further to 50K and possibly even smack like 45K down there. Like we might smack 48K, 49K, 45K, somewhere down there we might hit it. But yeah, that's definitely a level that we're gonna have to keep on watch pretty much. All right, so we have that, and obviously we have the support here at 40K, but I don't think we're gonna go all the way down to 40K. It doesn't just go all the way down immediately, right? It takes time to do something like that. So that's why the target right now, after we break down below 68K, I'm pretty much targeting 60K, then some type of try to rebound from there or something, and then a continuation down to like 50K. So that's kind of how I'm looking at it right now. It might not happen immediately. It might take some time, or it might happen immediately, right? You never know with this type of stuff, right? But currently though, we're looking good for the bears, right? The bears are looking good. The 50-day moving average, we're below it. The 200-day, we're below it. And then not only that, we have our MACD, and as you can see, we're getting more selling pressure here. So this is like an extended period of selling pressure. We're going to see this extending for a while longer. I guess it's going to look something similar to that. So yeah, it seems like we're going to get some more selling here. So let's prepare for that. And it looks like it's going to be a large amount of selling, right? Because this right here, and this is why I keep telling people, like, you have to pay attention to this stuff. You have to pay attention to these patterns. This right here is divergence on the MACD. And this is bearish divergence on the MACD. And bearish divergence on the MACD, you get the higher highs on the chart and your lower highs on the MACD. I know it sounds repetitive at this point, but this is how you can track this stuff. Because the whole time there, we were creating higher highs. Simultaneously, we were creating lower highs on the MACD, which would have told you bearish divergence. That means that's the last higher high. And we got rejected at the 200-day moving average. And we hit the top of the bear flag. So it was multiple reasons, multiple areas of confluence telling us that it was going to be bearish. And, you know, that's why it's really, really good to know stuff like this. Like, you know, that's why I always bring up these charts with the divergence, because I know it's super repetitive, but it definitely helps out when you have a diagram that just shows you exactly what is happening in your charts. So I knew it was going to dump because that was the last higher high that we were going to get. And we're trading within this bear flag. So that is how I knew that. But the percent R trend exhaustion is still coming down. This is the long-term trend, the blue line, and then this is the short-term trend, the white line. Remember what I said in my previous videos. The second you start seeing that long-term trend coming down, you're going to see that price dump. And that's exactly what happened here on the percent R trend exhaustion. The long-term trend did not continue upwards, and it just started to dump right there. And that is what's bringing the price down so much. But when the short-term trend bottomed here, is going to end up curving upwards alongside of the long-term trend. So it's going to end up curving upwards, which means we're going to have a rebound. And that's why I was mentioning, when you see it coming down, we're either going to hit this 68K area and then rebound, or we're going to go down to like 60K and then rebound, right? We're going to go down to like maybe 65K. We got support here, micro support. We got some micro support here, 62K and at 60K. So we're looking at 60K, 62K, 65K, and then we have 68K. Those are different levels that we could hit and reach as we are coming down, right? Those are support bases that we could use on the daily chart that we're looking here. So when we also pull up the weekly chart, it looks a lot worse here. So on the weekly chart, it definitely looks like we're gonna have a huge red candlestick. Like we're gonna see something like this probably, like a huge one, right? When people see the really big ones, they call them God candles. So I think that could be what we see here, just all the way down to 60K. So yeah, there's a possibility this one could even go down lower. So that's why I'm shooting towards 50, but not on the first pullback. The first pullback, like I said, 68K, 65K, 62K, 60K. Those are the levels that you watch on the first pullback. Then after that, 50K is what we're targeting. But you can even see here on the MACD, we're getting that selling pressure coming in. And you can see how it's curving this way. This right here is what you call bullish divergence. So we are going to be bullish at the end of the year. And that's why I keep saying we're in a bear market. We're creating bullish divergence within a bear market. All right, be patient, guys. We're bullish, right? We're bullish. But first, you got to wait for the bullish divergence to play out. Because once you start seeing these candlesticks going down into selling pressure, then boom, it's going to stop right here. And then it's going to go up. Why is it going to do something like that, right? Why is it going to do something like that? Because when you look over here, that is how bullish divergence works. Bullish divergence, you are literally bearish until your last lower low. So you're having these lower lows on the charts, on the candlesticks for the charts, and then you're having these higher lows on the MACD. Bearish divergence is the opposite. Remember what happened on the daily chart for the bearish divergence, because we're looking at the weekly chart right now. But remember what happened on the daily chart. We kept getting those higher highs, right? We kept getting those higher highs. And these higher highs were like this. Just the highs kept getting higher and higher until they couldn't get higher anymore. So we kept getting those higher highs. And then after we kept getting those higher highs, we had the dump because we reached the end of our bearish divergence and did our last higher high, right? Bullish divergence is the exact opposite. So what we're seeing with bullish divergence here, we're now going to create our lower lows on our charts until we can't create lower lows anymore. So we're pretty much bottoming out here. So the reason why I'm saying this is because if you look at the MACD, obviously like this is going to end up something similar to this, right? It's going to end up something similar to this where we end up seeing the price pull back on the MACD here. And that is the next higher low on the MACD and then goes higher here. And then this is when the buying pressure starts right towards the end of the year, September, October, right? And that would be bearish divergence, right? Or bullish divergence. We would just be creating those lower lows. We haven't created the last lower low. That's why I say our last lower low could be anywhere from 50K to 40K, right? And also I mentioned from 50K to 28K in a previous video for my last lower low for the bottom of the market, anywhere from 50K to 28K. I moved it to 28K because I'm like, you kind of got to give it a broad range because you never know with these markets. But I think realistically, 40K to 50K, right? Realistically, anywhere from 40 to 50K is going to be the bottom, realistically. But extreme bear case, anywhere from 28K to 50K. All right. So you got all that information here straight from me. So I'm going to keep you guys updated on this stuff. I'm going to make sure you guys never miss a beat with this because, you know, I think it's really important to follow Bitcoin over everything else. Right? I see my Bitcoin videos get the least amount of views, but I think people need to be paying attention to Bitcoin. Bitcoin is controlling the crypto market. Now you have some stuff that is breaking away from Bitcoin, right? But not everything's going to do that. And the coin that I talked about the other day did exactly what I said it would do. Well, not exactly, but it did what I wanted it to do, right? Lab. So it did go up to $12, like I said, and it went up to $12 all the way from like $5. And I started talking about it around like back here inside of May or April. I don't know. I started talking about Lab early. But yeah, Lab did exactly what I mentioned that it would. And it's going even higher than I thought that it would. So I'm going to make a video on Lab. But in the meantime, if you guys are looking at it, $26 and $32, I don't think it'll get above $32. So if you see this thing pushing $30, sell, hit the door, run. You probably should be doing it right now. You should probably be selling lab right now. But anyways, if you're a risk taker, you could ride it out till possibly 30. But I would be running at the door right now. Like, look at this percent arc trend exhaustion. It's overbought on the percent arc trend exhaustion, but it could stay overbought for a longer period of time, especially with huge candlesticks like this on the MACD. So I'm just telling you guys now, if you're doing the lab thing, right now is a good time to sell. If you're a risk taker, take it to the top of the Fibonacci. If you're a risk taker, take it up to this $26 resistance at the Fibonacci. Well, technically 27, and then take it up to this $31 resistance, right? But I would say, like, if you start seeing this hit the upper $20, get out. $30, definitely get out. Even right now, take some profits. But yeah, this thing's getting risky. It's getting risky. But yeah, I see a huge pullback coming. I'm going to do a whole video on this. I just wanted to put it in here because I'm not going to have time. And I want you guys to get the info because this thing's moving fast. All right. So we got that out of the way. And we didn't really look at the 4-hour chart yet for Bitcoin, right? We're at 69.1K here. And like I mentioned before, look at this. What do you think is about to happen here? We're probably about to get some buying pressure coming in. So if we're going to get some buying pressure coming in on Bitcoin, like I said, this could happen at 68K actually. So if we don't get like a huge sell off here, then it'll happen at 68K and we'll try to retest 72 or something like that. And if we do get a big sell off, we'll hit like 65K and then try to retest 68, 69K. But that retest is coming. Just wait. We're going to have a rebound and then it's going to try to do it. But even on the 4-hour chart, we are still developing bullish divergence, which means we're going to have selling pressure, right? Which means we're going to make lower lows because that's what happens during bullish divergence. So either way you try to spin it, when you're looking at the long terms and the short term charts, lower lows are going to be created, right? We're going to be creating lower lows. So yeah, this is all I got for that. And of course, you know, everybody's switching bearish. I think this guy was already bearish. This guy was already bearish. Same guy. Yeah, Ted, he was bearish. But I'm starting to see everybody else is starting to switch bearish, right? Everybody else is starting to be bearish. I don't know if Altcoin Daily was bearish, but yeah, he's bearish now. So it's funny. You know, I stayed bearish the whole time, but now you're seeing the whole crypto market. They're all switching short now, literally. So, you know, see how tables turn. And that's why I stayed bearish the whole time, right? Now I did start to you know, get a little bit wishy-washy up here at that 200-day. I started thinking, oh, there's a possibility we can break it. So I was like, yeah, got to keep that possibility in, but I'm still overall bearish. And that's exactly what happened. We continued to dump. But yeah, this is all I got for you guys today. I just wanted to bring this info to you guys. We should be hitting 60K soon. Unless we get the rebound here, and then we could hit 70K again and try to retest those levels, trying to get back into that bear flag. But overall, I think that we can break 68K and hit 60K soon. So this is all I got. Hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Check out the links in the description. And as always, I'll be back with another video.